Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Tuesday. It's Tuesday. Taco Tuesday, man. For those who were watching the show yesterday, sorry about that. I forgot to hit pause at the end, and my sinuses got the best of me. And then the weird part is, I tried to edit the video out right away, but for some reason it took YouTube 12 hours, literally 12 hours, to get the video ready so that I could edit it online. So unfortunately, it was a long-winded. It is, I don't know if it's Fancy Shirt Week, but it's definitely one of those. Definitely one of those weeks where my shirts are maybe a little bit different. I'm in lazy mode. I'm still recovering from this cold. I feel like I've turned the corner and things are looking much better. So hopefully, no issues for you guys today. I'm all right, Lisa. I just had a really piercing headache yesterday, which was unfortunate. It was pretty significant yesterday, headache wise. But yeah. Anyway, we're good. So let's go into a couple different topics today. Number one was the S&P retracement right into our overhead supply we talked about, which I think was great. But I want to go into something more telling. And I may have actually titled a show this in the past before, which was the Not So Magnificent 7. And I thought it was kind of interesting because of the performance of the Magnificent 7 stocks. Now, I'm just kind of curious, before you guys go pulling up a bunch of charts and trying to get that answer, what do you think is the best performing stock this year of the Magnificent 7? Right? Which one's the best to date? As we run through them, obviously you have the usual suspects, which is Apple, Microsoft, Amazon, Google, Nvidia, Meta, and Tesla. So which one do you think is the best performer this year? Now, I tried to keep a benchmark of obviously what the markets are doing, and we look at what the overall markets are doing. Let's say if you went by the S&P 500, you're looking at a market decline from December 31st, so the last trade of the year, to where we are right now. S&P is down 4.28%. 4.28%. So really not that bad. Again, I thought we'd see a positive first quarter, flat second quarter, and then down third and fourth quarter, and here we are with our Q1 looking rather negative out the gate. So down 4.28%. So as we run through this Magnificent 7, I think it's really interesting to see kind of which ones are doing better than the market. And there's one that's doing better than the market. You see you guys are all over the place. I see Apple, I got Netflix. Did I not have a Netflix on there? I don't have 1, 2, 3, 4, 5, 6, 7. Yeah, I don't have Netflix on there. I took Netflix out, and I think I replaced it with Nvidia. The answer is, I'll run through here. The answer is Meta. Meta today, and that's why I did the show title, because it's actually the first, so it's the last of the Magnificent 7 stocks to turn negative on the year. As of today, it's down 0.26% for the year so far for 2025. That's Meta. That's your best performer out there. And it's interesting to me because we talked about it so much on the way up, where tech was just the answer, and tech was pulling everything up. And as long as those guys kept trending and making higher highs, there was no reason to look again to go against that trend. And here we have all of a sudden markets looking way weaker. And I did this twofold. There were a couple questions, and I believe it was Jeff, sent in some comments, and he was asking about, at what point do you look for? And Michael G, I think, also asked about this one. What signals are you looking for that it's over? And Michael G wanted more about recession, which I'll get into. But what's the mantra I use all the time? You guys hear me say it all the time. It's annoying as hell, I'm sure, but you know what? I use it for a reason. The trend is your friend until the bend at the end. So as you look at this now, it's kind of like a duh, obviously. Right? If you were to draw a trend line on this bad boy, we'd probably connect these lows here, and we would have broken through that about 2 weeks ago on Meta. You could also, if you wanted to, use something like a moving average. That's a 200. Let's go shorter. And this is going to be, let's adjust this to fit. Let's go to a 100. Sometimes I worked with a trader once where he would adjust the moving average to fit his purposes. Well, this looks like it would probably fit better at a number which most people would not use, like a 75. Let's see if that fit. Okay, there you go. I know no one's going to use there are a lot of Jeffs in the room, Jeff. No one's going to use a 75, but one interesting trick that I think is a pretty cool one. A trader I worked with many years ago, he used to take a moving average and he would just adjust the number of that moving average till it hugged price the most consistently. And I think you guys would all agree that if you look back here, a 75 period moving average, which I would never use personally, looked pretty cool. It started off back here in September. It bounced on it again in November, bounced on it again in December, bounced on it again in January. So, hey, you could use this as your trend line and say if it closes below that 75 period moving average, then, that's the time to get out. Well, right here this is March 6th, so not that long ago, we officially broke below that 75 period moving average, and now we've come back down to swing pivot lows. So if that trend line break or the moving average break wasn't your first sign, it should be that we're now back down to these lows we established back in December. Getting down below these lows, and I think actually for me the low point would literally be this guy right here. Hold on a second. Again, I'm on Meta for those that listen to the podcast. That's 580. All right, $580 is that low point that goes all the way back to December 20th of last year. If that breaks, then there's no argument in my book. The trend is over, and now it's a question of does this begin a downtrend or just consolidate and go sideways for a while. So that's where we are. This was your best performer. Now, when we look at some of the other companies in here, I'll run through some of the names that you guys had mentioned in here. I'll go from the top. Margaret says Apple. Well, Apple on the year, that same window of time is down 15%. And Apple's an even worse case. Let's get those moving averages off there. Right, I say worst case because notice we've already closed below this red line. I drew that red line on over a month ago that said if we get it closed below 219.79, then that's your official, we've turned the corner for Apple. And lo and behold, we have. Now, the question is, does this hold, right? Does this big panic sell-off that's happened over the past, let's say, month, does that constitute the extent of it, or are we going to see a bounce back up and all of a sudden things are rosy and honky-dory again? For me, I'm going to put my chips more on the bearish aspect, slightly bearish, trending down, but not aggressive sell-off. So that's Apple down 15%. Microsoft was the next one on the list. Actually, Nvidia for futures trader. Nvidia, which we'll talk about here in just a little bit, for the year, Nvidia's only down 14%. So I say only. It's way worse than the market, and I was actually surprised to see it down today based off of what I saw from Jensen, Huang, and the prospects from Nvidia today. I don't know if anybody here watched that conference, but it was interesting. Some of it was honestly over my head, and I consider myself to be somewhat of a techie, but we'll get to that here in just a little bit. But yeah, Nvidia down 14% for the year. What was after that? Amazon for TOFI. Let's go look at AMZN. Amazon for the year looking pretty ugly, down 12%. So better than Nvidia, but even Amazon, which for me as a long-term play, I will start considering buying some Amazon for the long haul here. I'm an Amazon fan. I use Amazon way too much. Guilty pleasure there. And let's see. I guess I'll just run down the list here. So we had Microsoft on this bad boy. Microsoft down 9%. And again, Microsoft is kind of unsung hero of this whole Magnificent Seven rally. It's been this tech giant forever, but really, I think the cloud and AI have transformed them into a much bigger player. You can see here, just over the past couple of years, going from 2018, Microsoft is down around $60, and here we've breached 460 just a couple of weeks ago, or a couple months ago. So, all in all, phenomenal performance, but rightfully so to get a pullback. Now, Google, on the other hand, looking worse than that, 14.58%. We already looked at Nvidia, Meta, and of course the worst one out there, which again I'm still going to stay away from for now, is Tesla. Tesla facing a whole different set of challenges than these other Magnificent Seven companies. Now, I put the not so Magnificent Seven up here because if these guys continue to pull down, their weighting in those indexes is going to have a much more profound impact on performance of the indexes. Now, when you move so much, we're talking 12, 15, 18, 40% in some cases, generally you get that knee-jerk reaction back up. And that's kind of what my approach was to the S&P 500 chart. So I'm going to kind of merge these two together and talk about the S&P for a little bit. I thought that we might hit it later this week. I didn't think we'd get this jump up in the after-hour session, which was awful for me. I was I'll be honest, I was irritated about this one because it happened in the wee hours of the morning, and I didn't make trades on it. I wanted to trade the equity markets, not the futures market. I went to the futures, thought about making the trade, and said, I want to wait till the market opens. I thought it was just too illiquid in the wee hours of the morning. So let me show you a 5-minute chart here of the S&P 500, and you can see that last night when we rolled over, we gapped up into it, and we gapped up into that supply zone on the rollover here, which, right around 4 p.m. was in that supply. And I remember looking at it going, I want to, but I don't really get that comfortable feeling shorting before I'm about to go to bed, even though I could have put a stop loss on this bad boy and been okay. We came up, we double topped here in the after hours session going into the wee hours of the morning. And by the time we opened up, it had already gone outside of my entry price. And you guys know the rules I have. I'd be doing what some would call a number 3 entry as it came out of that supply zone. And then by the time that I was back into it or looking at it, we'd already started to flatten out and did nothing for the remainder of the day. All the action happened in the opening 45 minutes of the day for the S&P. Now, to me, we had the discussion on the daily time frame, and I think that might be Margaret's question here. What are you expecting from the market after the Fed meeting on Wednesday? Okay, I'll get to that in just a sec. But from a technical perspective, it's doing exactly what I anticipated it doing, right? Breaking down below demand and retesting and now selling off. So our dominoes to fall. And I feel like I've tried to set this up, right? Step number 1 of this trend reversal is breaking a swing low. That's critical. Step number 2 is breaking a pretty solid demand level, which we'll make that argument here in just a second that we have done that. Step number 3 is retesting that supply zone now, because it was demand, now it's supply, retesting that, and it holds. Now, there's only one step left. What is it? We look at this price chart. It's performed all these actions that I just talked about. Let me see if I can do a number circle here just to make it fun. Step number 1 was breaking nope, that's not a circle. Step number 1 was breaking a pivot low. Oh man, I don't use these tools. So there's your swing low that it broke. I'll zoom in here a little bit more. It broke this one back here in February, right? That's the first time. Step number 2 is you have this really strong demand zone, which it hit multiple times. It actually bounced off it for one day and then broke down below it. That was, for me, the real trigger. And then, it'll free fall for a little bit, and then the big question was retest. And here we have the retest. Yep, Margaret, Liz, you guys got it. To me, it's that new swing low. So if it's breaking down below that blue line, then your downtrend is confirmed, and it's short pretty much any rally you're going to get in the market. And not necessarily just the market, but a lot of individual securities are going to be following this market direction. And how long it will go, how pronounced it's going to be, how fast it's going to be, no one knows. It's just saying that the sentiment is now rolled out of it. The sentiment's no longer as bullish as it was. I know we've got some perma bulls in here, and that's totally fine. But the pictures has fundamentally changed, at least for now, when we've got our, kind of our third point of verification here. And it happened real quick. I mentioned this on the last couple shows. I thought we would retest this. I thought it would take a little bit longer, honestly. I thought we'd probably get there by later this week. Didn't think it'd happen on Tuesday. Now the question is, does this continue on? Getting those lows. For those listening to the podcast, I'm looking for a low of 5,509 on the S&P futures. If you get down below that, then I think, you're shorting, you're closing your long positions, and now you're looking for any rally as a shorting opportunity, whether you're shorting the SPY or looking at some of those other broader market indexes. Jeff says 5,200 next step. Yeah, there's a little, you could argue there's a little blip over here right around 5,400, but yeah, I do think that the 5,200 is a much more logical target, and from current levels to get down towards that 5,200 mark. For me, it's 5,241 is kind of the top end of it. Based off the daily. I could refine this by looking at a different time frame. That would be a drop from current levels of roughly 7.5%, which is not that big of a deal. I guess I could draw this line out here and say there's a 7.5% target. So that's where I think we stand right now, and all eyes, in my opinion, are going to be on those magnificent 7 to push that lower. right? If we don't get a good bounce here from Nvidia, which again, I thought today we would see more of a bullish day. I did sell puts on this one, so I have the 112 strikes for Nvidia. I added some more to it today, so I've got a bigger position. Well, I guess it's not a position yet, but 112 is kind of that target number for me. If we get it, I'll probably sell at the money calls right away, just so to protect myself from a little bit more downside movement here. Well, hey, Big Eb, good to see you. All right, so for me anyway, and you'll probably see a bit more direction from this show, and that is just watching these Magnificent Seven, kind of keeping an eye on them. They have all been most of them have been making this predominant series of lower lows and lower highs going back into December. Google, you can see here, just trending aggressively lower. I got this, I don't know why I have this downward trend line on here. Man. Did one of you guys put my phone number on a spam call list? Because all I'm getting is probably 50 a day now. Crazy. Amazon, and for me as someone who likes to be a shorter term trader, this does create some great opportunities from short perspective. However, in some of my long term accounts, I am interested in buying some of these companies. I am interested in buying Amazon. Of course, I'm a huge Amazon fan. I'm also interested in acquiring Tesla, but Tesla, I'm much interested at lower levels. Right now, I think you got to wait for this to pass. This is going to cause a lot of damage to Tesla's bottom line, I believe. I don't know if you guys saw the latest attack was in Las Vegas, where they blew up a whole bunch of Teslas and damaged the Tesla dealership up there. It's just stupid. I wish people would just kind of not attack people's personal property. I mean, I don't know. It just seems kind of silly to me. But I think you're going to have more downside here for Tesla. So I want to buy Tesla. I'll probably sell puts that are deeper out of the money just because the premium is so tasty. But I'm not really that excited about owning Tesla here, even though I did say I like that 210 mark. I'm looking at a bigger picture of Tesla, kind of where I think would be a better point. Really nothing jumps off the screen at me. I do like the 185 level, which would be about another $40 from current price. Stepping out even further, I don't know. I mean, I don't think we're going to get to $100, but if it went to $100, I'd be glad to buy a bunch of it. Jeff says 180. 180 would put us right at that last turning point from August. And yeah, if I get the premium, I looked at it today and I just didn't get the premium I wanted, even though we had a down day of about 5% on Tesla. I think you're going to get more days like this. And it's just because of the backlash. The people that just don't like Elon Musk are now attacking anything to do with Elon Musk. So, heaven forbid someone should attack SpaceX rockets as they go off and those things crash and do some damage. But, right now you're seeing more and more stories of Teslas being burned and vandalized, and that may cause apprehension from some people to go out and buy a Tesla. I tell you, if I see someone vandalize a Tesla around here, I'll punch him in the face. Just shouldn't be vandalizing someone's car because they bought a vehicle that they thought was doing good for the environment. They like a vehicle. I think buying a Tesla doesn't mean that you're a huge supporter of Elon Musk. It means that you like the vehicle, and in your mind, clean energy or going to electric vehicle is the way of the future, or you just like it better. That's your prerogative. It doesn't warrant an attack on you at all. All right. Big ups. I've been stopped out of about half of my Microsoft, Google, Amazon, Nvidia over the past few weeks. Yeah. Hey, I appreciate that you've been stopped out, Big Eb, right? Because what's worse? Holding on to those as they continue to fall lower and lower and lower, and all of a sudden all those gains evaporate? Certainly you're getting out of some of it. I think it's a good thing. A few more months and it will be over. I agree, Jeff. I think that this will pass, but that's another few months that I just don't know if I want to be buying it right now, because that means I'm going to be holding it in the red for a little bit longer. Lisa, but Tesla's also getting a lot of competition with BYD and EV car. Totally, but remember, they've always had BYD. There's always, well, not always, but BYD's been a big thorn in their side and competitor for a while. So is Lee Motors. So is Lonsdale. So is Rivian. So has Fisker. Some of them disappeared. And we talked about this many moons ago. I think two years ago, maybe 3 years ago, we did a show of on the EV space. I forgot what that was. A fun show. Did a show on the EV space, and of course the two winners out of that for me were number one, Tesla, and number two were Rivian. I like BYD, but I have a real problem with Chinese manufacturing or Chinese companies. I don't trust the numbers. I saw a video yesterday, a couple days ago. I don't know if you guys have seen this one, but it's It's the Lee Motors has a vehicle out that is incredible. I mean, it's amazing what this vehicle does. And what'll happen is the next generations of Tesla will probably incorporate some of those updated modern features. But yes, they are going to get some competition, absolutely. And if you look at what Trump is doing from a tariff perspective, how is that going to impact Tesla? It may actually help Tesla, right? Because if BYD is a Chinese company who's already said they have no interest in the United States, now all of a sudden they're potentially going to come to the United States, those tariffs could seriously impact the cost of that BYD model, even though it's going to be a cheaper manufactured vehicle because just China and its labor costs. Once it gets here now, there'll be an increased price, and that could help Tesla out a little bit, at least from that competitor perspective. But without question, there's a lot of competition here. Does the current actions or animosity towards Elon Musk, does that impact people's buying decisions and say, hey, I'm not going to buy a Tesla because it's Musk's company. Do I go with BYD because it's not a Tesla, right? I think that might be an issue. Does it help Rivian's sales? Look at Rivian. I think that this could actually help Rivian out a bit, right? Another U.S. manufacturer, one that can probably benefit from the tariff issues. Certainly a lot of their components are coming from China, so that's an issue, but at least the vehicle's manufactured in the United States, so not getting any other tariffs there or taxes. The steel and aluminum. Yeah, who knows? It's, I mentioned the big three EVs. Today, General Motors made an announcement with Nvidia, which I think was pretty cool for driverless cars and things like that. I don't know. We talked about this in the past. Like, how do we not have General Motors or Stellantis or Toyota or Honda at the forefront of the EV space? And of course, the Prius is still a very popular vehicle, but if you line up a Prius next to a Tesla, you're going to point and go, that car looks cool. That one doesn't. Sorry for all my Prius drivers out there. Tesla gets its batteries from China. Yeah, they get a ton of other parts from China. I know that Tesla was trying to do a giga battery factory in the U.S. and trying to bring more stuff here, which this may further influence that. And who knows, behind the scenes, the new one does. I'll give you that, Margaret. A friend of mine just got a brand new Prius. They're nice. The old ones, I couldn't stand those things. Ugh. It almost like instilled anger when I see them on the freeway, because it always seemed like the people driving those little, I don't know, looks like a little bean Priuses, they always were the worst drivers. They're always cutting me off and splitting lanes and driving 35 on the freeway. Like, what are you doing? But yeah, the new one looks pretty cool. We just came out with a sleek looking EV. Even as someone who's German, I like the German cars. I'm a maintenance cost person. I like a vehicle that's reliable, gets me from point A to point B, and is economical, cheap, not cheap, but reliable and inexpensive to maintain. So I will never have a BMW. I'll never have a Mercedes. I won't have any vehicles like that. But let's see. Panasonic Battery Factory in Kansas City. Right on. There you go. I knew they were doing a Gigafactory. I didn't know that they finished that one. Cool. Well, Honda's been in talks to merge a couple of months ago. That's why I didn't hear anything from them. Look, I think that's great. If you own a Prius, you own the road. Look, I think there's going to be more and more competition in this space. What I am questioning is a lot of the perks, a lot of the incentives as consumers to buy electric vehicles from the manufacturers as well. Those may all be disappearing. And what impact does that have on that industry? I don't know. I would think it probably going to do a little bit of damage to sales of EV, knowing I don't get those tax credits and extra perks for buying them. That may sway me. Now, I'm somebody who probably drives, I don't know, I might drive 20 miles a week, if that. Doesn't matter whether I have an electric or gas. Doesn't matter to me. It doesn't cost a lot of money. Let's see, Lisa, I don't want to pay high maintenance costs. Yeah, that's why I love my Toyota, man. Toyota's very inexpensive to work on. Damiani, yeah, GM and Nvidia partnership. If you guys, I don't know if you watched it today, but the GTC keynote opening speech from Jensen was pretty interesting. I'll dive more into that, but yeah, I think a lot of these automotive manufacturers were watching that today, saying, we might be able to use some of this AI tech as well. And I think when you look at some of the big three coming more into the space, realizing that Tesla may be under pressure and seizing that moment, which I think they should. Nvidia stands to benefit from this one as well. No problem, Liz. Have a wonderful day. Thanks for joining us. Let's see. So let's go BYDD. BYDD. I forget which one it is. It's F or Y. I think it's going to be the F. Look at that chart. Let me get that out of there. It's been looking fantastic. I mean, BYDD, when we initially did that show, was back here. I think it was in 2021. You're at 24, maybe $28. Now you're up at $52 on it. Lee Motors. I'll see if I can find this video for you. It was one of the coolest looking vehicles, and it actually made me think that if that came to the States, I would look to buy it. The grid for EVs is falling behind. You mean the charging network, the infrastructure? And that's a huge problem. I've mentioned that for me, that's one of the reasons I don't want one. I have family and friends up in Northern California, and for me, that's a 6-7 hour drive. Well, I need more than 300-mile radius, and last time I drove to NorCal, I came down the Grapevine in Southern California, and the line for the charging station was like 50 Teslas deep. I was like, the gas stations are empty. I don't need to wait at the gas station. Plus drag racing. Joe says, drag racing in Prius isn't great. I'll tell you what, there's a guy who is on a show, I think it's called Pinks, and they just race for pink slips, and the guy shows up in a Tesla, and he has a Tesla Plaid model that he's stripped everything out of. Like, all the interior is just gutted on that thing. No one beats him. He's incredibly fast. So there we go. All right. Yeah, I didn't. Was that in the last couple minutes, Oliver? He says that Android Robot was pretty cool. I felt like Anakin Skywalker with. So I have this much left. Here's my size. I have 25 minutes left. I'm looking forward to watching that one at the end of today, after this show. But I love this guy for his attitude. He rolls out in a leather bomber jacket. Yeah, I'd like to see who his manufacturer is. He should probably advertise for them. But yeah, he's got a pair of Vans on, leather bomber jacket, doesn't have that typical CEO look, and he doesn't run a typical company. Pretty cool. Definitely a fan of Nvidia. So let me, I think Margaret asked, what do you think of Tesla on a monthly? Let me just real quickly bring that one up. So Tesla on a monthly, you could still say it's looking okay from a trend perspective, from a higher lows perspective. I do think that this is creating a really significant buying opportunity for anybody who believes in the future of technology. I've been using Grok, so I actually pay for ChatGPT, and I use it to write the show descriptions every day now, which has been a total time saver. It saves me about 15 minutes. I love it. If ChatGPT charged me $20, I get Grok for $8 a month, and Grok is far better in its responses. It is really, really good and much faster. I'll probably cut my ChatGPT, start using Grok. I imagine they'll start charging more and more for their AI services. But I personally think that Elon Musk, with his feud with Sam Altman, so for those who don't know, Sam Altman runs OpenAI, which is ChatGPT. Elon Musk has sued him many times because apparently Sam Altman has lied about the company. And Elon Musk started that company as as a nonprofit, and now it's a full profit, and so Elon's suing them. And I think as the proverbial middle finger to Sam Altman, he's saying, fine, I may not win in court, but I will I'll put all my money into an AI system that's better than ChatGPT, and then give it away for free so it kills your business. And I'm up there going, right on, Elon, do it, because Grok is definitely, I think so too, Jeff. I think Grok is significantly, there's certain tasks where I think actually ChatGPT is maybe better, but I think that the model is getting trained faster and faster and faster under X, which is Grok is X's product, and I think it's better. Overall, definitely better. And you can create graphics with it for free. It's pretty cool. Lisa says, I like that Tesla 160 area. I do as well. That was that second big drop down here, so I do think the 160. Unfortunately, the premium is just not there right now to go for any short term. That's monthly. Just for fun, let's go and see. I'm just using this chain because it's easy. I'm curious what the 160 option premium. Oh, man. You could sell today, the April 17th, like literally going out 1 month, and sell the 160s and still get over 1% rate of return. Over 1% for a month. Man. Look, I can't give financial advice. I'm not a financial advisor, but I just don't want to lock up my capital for a month. I may do the weeklies on this bad boy and just sell at lower prices. But man, you could get the 160 strike price and still make over 1%. You get to call it $2, right? So that's what 1.25%, 1.25% for 30 days. That is pretty darn good. Pretty darn. Let's see what the weeklies are. I know this is a bit off, but 160s for the week. Yeah, you're not going to get much there. You get about 0.5%. 0.5% to sell Tesla puts at 160, which from current price, 160 would be a decline of 28%. So if you think Tesla's going to fall 28% or more than 28% by next Friday, don't do it. I don't think it's going to fall 28% by Friday. Wow. That's pretty interesting. Pretty interesting. So that April 160 strike looks pretty good. You're really ways out of the money. And, if you got Tesla at 160, it's a buy and hold. Buy and hold for me. So let's talk briefly about this one. So the Magnificent Seven obviously is going to be a main of interest for all of us. It's that guiding force that's going to push these markets higher or lower. If we don't get any rebound here, then we're going to get a lot more profit taking. Then move over to this one, which I brought up yesterday, which was the GTC day, GTC week. And, my main takeaway from this was the technology is innovating faster than anybody had anticipated. It's getting faster and faster and faster, and the only limitations are now energy and infrastructure, making sure they can build these facilities. Nvidia, what it looks like to me, is going to be making a lot more of their money off the data center applications, the building out of data centers for these major firms. And you look at the upgraded Ultra Blackwell and the Grace chip and everything. There's so many other pieces here that to me just continue to separate Nvidia substantially from the rest of the industry. Now here, we'll just do it because we talked about the monthly time frame, but there's your monthly chart of Nvidia, which honestly still looks pretty good. What makes me nervous is how it's had such a monumental run, but that's okay. Usually those don't last, but I think this technology does. If we look at what's happening with Nvidia right now, you got a downtrend going. You've got lower lows and you got lower highs. If you are the person who says that the trend is your friend to the bend at the end, and you're looking for shorting opportunities. In this case, I'm bucking the trend, and I'm looking at Nvidia as a buying opportunity just for the long haul. I don't think you're going to see a significant decline in Nvidia. I was selling the 112s. I'd sold the 110s. I sold the 108s. Now, for me, that 105 looks like a pretty attractive area because that's that last bounce we had on March 10th and 11th was right off that 105 level. So if I can sell the 105s and collect premium over the next couple weeks on a weekly basis and get enough premium, then that's probably where you'll find me, is looking at that 105 level on Nvidia, looking to buy if it gets to 105 and collecting hopefully 1% per week. Let's see what it is right now. We'll do the 105 weeklies on... I think I was looking at a different stock. Maybe I was looking at MicroStrategy. I don't know. Let's go to Nvidia. I don't think I changed our symbol there on the chain. So if we go out to, next Friday, and I look at that 105, which is what I was looking at, I'd make just under 1% for a week. That's fine. Today I had on some 112s, and that was over 1% for the next 4 days. Again, that's fairly risky to do the 112s just because we're pretty close to it. To get to 112s between Wednesday through Friday, Nvidia would have to drop another 2.95%. And I don't know. I don't think that will happen. But my gut tells me it won't happen, but you never know. Anything can happen in these financial markets. So these are probably the two I'll be playing the most over the next couple weeks is going to be Nvidia, Tesla. Actually, Nvidia, Tesla, Amazon, and SMCI will be the ones I'm focusing on the most just because the premium is so good. Three of those, meaning Amazon, Nvidia, and Tesla, are all stocks I would be very happy to own. Good. Is it SpaceX is landing soon? That's awesome. Good. Man, I put myself in their position just thinking about it, and I just have chills. I'm claustrophobic, and being stuck in a very tight, confined space would not work well for me at all. Not at all. I'm glad those people could do it. Is QT going to end tomorrow? Yeah, I would love to watch that landing too. Will it end tomorrow? Well, I don't know. I probably should have Bill Addis on to answer that question. I don't think that they're going to cut rates tomorrow. We can go look at the Fed funds, but I'm pretty sure you guys all know it's going to be like a 99% chance we're going to keep rates right where they're at. So I don't think that that's going to be a change of scenery there. The press conference after will allude to that. And again, that's going to happen 30 minutes past 11. So I'll bring it up here. Right now, you got a 99% chance they keep everything the same. The press conference happens 30 minutes after this. So that to me is when the real moves will happen. Unless there's a shock to the system. If they do something dramatic and do a surprise cut tomorrow, then this market will probably have a knee-jerk reaction and rip to the upside. But, the long-term perspective here has started to shift back up. Remember, a couple days ago, we had like a pretty significant 33% chance of 3 rate cuts. Now it's only 28, and this is starting to move. Yes, 2:30 Eastern Standard Time. Correct. So it's 11 a.m. is the announcement here for the rates, and then 11:30 on Pacific time is when they come out with the press conference. And I don't know my schedule tomorrow. Usually I watch the press conference live. I love watching it just because I like to see the little details. You can thank Bill Addis and David Warner for that one. Bill Addis, he always listens to the press conference and tries to see what little words have changed. Even one word can have a pretty big impact on our markets. Jeffers, USA will also be mostly refunded, so not much change at the time. Oh, I don't know about that. Oh, ordered by the courts? Who knows what's going on there? And this is a strange political battle that's going on. Reporters are going to have to ask stuff. They usually do, Damiani. Not Rick Santelli. Oh, man, I forgot his name. But there usually are some pretty good questions there. A lot of them are typically the questions I want to have answered as well. I'm always wondering, like, hey, where's your stance on this? What's your thought track on this? One other thing I want to talk about, and this goes back to Bitcoin, and I forgot the gentleman that asked the question, but it was asked yesterday. And the question was, what do you think about networks like Stacks? So I think I've mentioned this before, that one of the major problems of these crypto networks, at least the older generation, is they're not scalable. I mean, Bitcoin does 7 transactions per second. Ethereum's doing 13 transactions per second. They're archaic compared to the new stuff that's being created that can do hundreds of thousands of transactions per second. So Bitcoin has always been a payment network. That's what its core is, just to send value from one person to the other. Stacks is a layer 2. Now, because Bitcoin is slow and can only handle so many transactions, it's by design, just so you know. It's a security measure to have Bitcoin operate slowly. It gives everybody in the network a chance to verify transactions, prevent people from being scammers and hackers, and keep that network secure. So what Stacks is doing is creating a parallel chain that says, okay, we're going to be a layer 2, and what we'll do is we will bundle transactions in Bitcoin. So you can use the Stacks network as a payment network and make real rapid payments, just seconds, as opposed to 10 minutes on Bitcoin. You could do it in a second or two on Stacks network. So now what Stacks will do is bundle together a bunch of Bitcoin transactions and then pass them through to the base layer, to Bitcoin, and therefore increasing the scalability of Bitcoin significantly. They also, Stacks that is, can also now do smart contracts. So it opens up DeFi, decentralized finance, on top of Bitcoin. And I'm kind of mixed here because I kind of feel like, as a purist, that Bitcoin should just remain a payment network. I don't need all this other stuff, all this fluff. However, as an investor, you have to look at that as the more people that use that blockchain, the more valuable the tokens or coins become. Same thing like Solana, same thing. No one was really using it. Token was cheap. Now all of a sudden it's really a popular blockchain. The Solana coin is soaring, or was soaring. This could cause even more demand for Bitcoin around the world if it can be used for all of these different purposes, like lending protocols, staking protocols. You have swap sites, all kinds of DeFi marketplaces. NFTs could now be done on top of it. And I'm torn. As a purist, I want Bitcoin to stay just a transfer of wealth. As an investor, as long as it doesn't mess up the safety and integrity of Bitcoin, bring it on. Bring more eyeballs to Bitcoin and drive that price up even more. So to the answer to that question, I like Stacks a lot. I think Stacks is a good thing. And there's also a Lightning Network and a couple other technologies that are designed to make Bitcoin faster, but it's a separate network built on top of Bitcoin. So there we go. I want to make sure I answer that question because because that one came in the other day and I didn't get to, I addressed it, but I didn't answer it fully. And hopefully now the individual who sent in that request is happy with my response, I hope. Michael G says, if you knew a recession was coming by the end of the year, what moves would you make in preparation for it? For me, this is fairly simple. I just start shorting the market. I short broad market. So if I knew a recession was coming, I would, not only would I clear out my long portfolio, I would build short positions. And depending how strong my conviction was, if I was really adamant that this market's going to tank, I would be using leverage ETFs like SDS and QID. But generally, those leveraged ones you don't want to be holding long term because that could cause time decay and contango effects from the rollover. It doesn't work very well. So I would be buying directional short or selling directional short, and I would probably be buying puts, depending on which industry sector or market I thought would do worse. And right now, I'd probably just go broad market indexes, just keep it easy, and buy puts directionally on the S&P to capitalize on some downside move. The big question is, how far does it go? The uncertainty, the wild card is the president and his administration. What do they do? Do they fix problems or do they create more? Do they create peace and stability in the world, or they create more angst and hostility, right? Those questions will be answered over time, and we all have our opinions on how we think it's going to turn out. I don't know. I have no idea. And I don't want to get overly emotional or invested in an opinion like that. I just want to make sure that I have an opinion about where things may be headed, and if the chips start falling that way, then I can position myself better. Today was a missed opportunity for me. I should have been loading up on puts directionally today because it did exactly what I thought it was going to do. It rallied up into an overhead supply level on the market. I think we're in a downtrend. I think we're going lower, and I missed that opportunity today, which is frustrating, but it's okay. There will be plenty other opportunities for me going forward. But again, I'm not here to steer your opinions of bearishness or bullishness. I'm just reading the charts like I see them, and our job is to make money off it. So, Michael G, if I knew it was coming, simple. Close out all long positions, start opening shorts. There you go. Makes it as simple as possible. And again, we don't know that something's happening. And then you ask the second part to this, is there a way to know if it is here before the recession announcement is officially made? Yeah, sure, absolutely. And that's by looking at these price charts, right? So if we look here, what's the definition of a recession? You guys tell me, what's the definition of a recession? And again, there's a loose definition, which most of us are familiar with, but ultimately it comes down to a specific agency that declares we are in a recession. But there's two kind of major metrics that we look at to set that determination. Obviously, one of those is going to be how far the market has sold off. That puts us into bear market territory. So condition number one, got to be down over 20%. So let's go measure out what 20% looks like. And I'll measure down 20%. I think I actually already did it. Yeah, I did. It's that red line. Okay. And then 2 negative quarters of GDP. There you go. Two consecutive quarters of negative GDP. So we could look at the first one here and say, all right, for us to get down from current levels to where we would now be deemed a recession, bear market, obviously, we'd have to drop another 13.95% from here. So what I would contend here for Michael G, who asked the question, is by the time they tell you it's too late, you should already be feeling the general gist that this does feel somewhat recessionary. And again, I do not intend to be a purveyor of doom and gloom, but this pattern looks different. It's all what the pattern going forward looks like. So 20% down gives you bear market, and then if you have the 2 consecutive quarters, they slap on the GDP, 2 consecutive declining quarters of GDP or negative GDP. That is where they say, oh, you're now in a recession. So let's go look at Forex Factory. And let me do a calendar here just so we can see what that looks like. Because we are getting mixed reviews on GDP numbers from different central banks. Some are saying we're going to have, contraction. Some are saying expansion. But let's go out here and look at the final GDP expectations here. And let's see. Last time we had 2 consecutive quarters of negative GDP growth after COVID was back in early 2022, right? That was June and September quarters of 2022. Now let's line that up, see what the chart looked like back in June and September of 2022. I'll put a vertical line for June, just ballpark it so you guys can see it. There's June. Oops, that's not a vertical line, Merlin. This is a vertical line. There's June, and then there is September. So there's the 2 readings. Notice we'd already witnessed a pretty significant decline by the time those numbers came out. Guys, does this picture here look similar to what we're seeing right now? In my opinion, it does. And then that trend continued to get weaker and weaker. And the data showed up much later. If we look at what the chart looks like now, it's the same picture. And now we get a bounce, and then it'll come off and close lower. And then probably based off of that, what that means is we should see by, let's say, maybe May, June, we start to get a negative quarter of GDP. Right? That's going to be like, oh, well, crap. Now we're really going to see it. Let's go back, since you guys asked, what's the unemployment level look like back then? So let's go close this out. Let me get rid of my filter here. And we'll go to employment. Take that out, apply that filter, and let's go back and check out our last unemployment rate. Okay, so let's go back into 2022. Unemployment wasn't that bad in 2022. Right, if you go, we had slight ticks up in September and June, so this was really a non-factor. Unemployment back then was 3.6%. We peaked at 3.7%, so not a factor. Now, we currently have higher unemployment than we did back in that window of time in 2022. I do think we have other variables that are a little bit different this time, given the government layoffs and AI impact, which I don't think we're feeling yet. So I wouldn't put unemployment as a big factor here. It's going to be market correction of a certain percentage, and then the 2 consecutive quarters of negative GDP. That's how we get the official stamp. But in my opinion, when we finally get that stamp from the government agency that says we're in a recession, it's already going to be too late. You've already missed a large part of that party. So there you go. Michael G., I hope that answered your question there. I think we've kind of covered it on this program so far, at least in my opinion. I'm of the opinion that the ship has turned, and right now it's a pause moment. But if we start making some new lows, getting below that 5,509 on the S&P, then our targeting is going to take us down to 5240, and then it'll stair step down from there and trend lower and lower. And if the news continues to be bad, the data continues to be bad, then this trend will continue. How low? Heck if I know. Someone asked me the other day, do I think we're going to get a 50% retracement? No, I do not think we're going to get 50%. I mean, 50% would be significant, but, could it happen? Yes. I hope it doesn't, for the sake of all investors, for U.S. investors. 50% would take us down to roughly 3,088, which, it's not that far back. I mean, that would take us back to levels we had in 2020. In my mind, I think we should correct. This has been just an unreasonable, ridiculous market acceleration. So protect those long-term accounts, protect your portfolios. Measure the number of weeks for the last bear market. Well, again, what was the timing of that, Margaret? Like, when did they actually say in 2022 that we were in a bear market? Well, remember, we didn't get the second GDP number until September of 2022. By the time you got that second GDP number, which could officially put us into the recession, we were already down 18%. We'd actually bottomed out at 24% decline. So, we still have a long way to go before we even get any agency to get on the radar to say recession. Now, there's a lot of people that think we're headed for it, and I'm not going to argue against that. I do think we could hit a recession, but we still have a long way to go before we get to a recessionary point. So, let's see. Let's see if we start talking about that, in June, July. I'm going to put a little a yellow box over here. I'm going to step. I think it's going to be more of like a July, August thing. So let's go here. I'll go July 1st to August. There we go. That's the September. So now I'm going to put that right here. I'll put that little window right there, and I'm going to write on this bad boy, recession. Can I turn it? All right, there's recession, and I wonder if I can rotate this. I can't. I'll just slide this over to right. Ooh, can I? Oh, nope. Oh, great. I just undid it. I will push this right into there. So I get my little recession window, and that's going to go from, I think, July through August will be when we start to get those signs. And again, we'd have to get significantly lower, but there we go. How did the markets do after the 2022 recession? Phenomenal, right? They came screaming out of it. We started off a little slow, but you know, it's the same basic thing. Like, look, if you go back to my methodology, which is not necessarily the right thing, but just the way that I do it, if you look at the trend, it was lower highs, lower lows. Right here is an area of interest because we broke. I say right here. This is now looking at August of 2022. That peak in August of 2022 broke this high from June. So now you've caused a swing pivot high. And we still made lower lows. So then you're kind of waiting for it to break again. Well, it all changed back here in June of 2023. So we did have some, you know, a slow grind up. But once we started to clear those old highs, then it really started to accelerate. And just gone nuts ever since. So there you go. Is this Trader Merlin show call out, Merlin? Merlin Mara breaking or respecting current supply zone? Ugh. You mean demand. Demand zone. I mean, if you're going to go to the dead tick on this one, it's going to have to go down below that low point, which is 1205. And right now you hit 1207 today. Your low point was 1203. So you technically did break it today on the tail, but it didn't close below it. So it's not looking good. I mean, if anything, Mara should have a little bit of a bounce up from here, but that trend is your friend, right? Well, that's not looking very good. And that's the same thing that's going on here for BTC. I was surprised to see Bitcoin perform the way it did today. I actually thought we'd see it break up towards that 86,000 mark. But again, there's a trader out there with a monstrous short position who is probably trying to enlist friends and other people to help push Bitcoin down so he can make some money. But we shall see how it all turns out ultimately. All right. Holy cow. I'm going to wrap it up. I need to run through our top 8 markets out there. We got the S&P out of the way, which is the most important one. So I'm going to wrap this up again. I didn't plan to do an hour show. I say this every day. Every day. I didn't plan to do an hour show, but here we are. If you have things you want me to cover for tomorrow, again, those who send in questions, thank you. You can send in your questions by going to tradermerlin@gmail.com or just send them in there, or put your comments down below any of the YouTube videos. I generally put those into the show and get them all prepped for the day. So I hope you guys enjoyed it. Again, keep your eyes on those Magnificent 7. The not so Magnificent 7. Maybe create some so great buying opportunities in the next couple weeks here. Well, there we go. All right, that's going to do it for me, everybody. Thank you guys so much. I hope you guys have a fantastic remainder of your day. I will see you all mañana, and I will make sure to turn off my camera in time today.